put out.
Okay, here we go. Stand by, guys.
Ready, throw A, 2, R1. Remember, turn the volume down back here, guys.
And we're getting going.
Oh, yeah. There we go. Welcome to Fortt Knox. I'm John Fortt. I'm not at the NASDAQ. Today, I'm at CNBC headquarters, in the bowels of CNBC, as I like to say, with Robert Frank, CNBC's Robert Frank. We're going to talk about watches today from all kinds of different angles, because we're a month away from the 3-year, I can't believe it's only been 3 years, 3-year anniversary of the Apple Watch.
Wow.
Which a lot of people predicted was just going to crush the watch industry, and it's a huge percentage of sales under $1,000. But there's a whole lot more watch industry than that, and I discovered recently, and you're going to hear about it on the podcast pretty soon, there's a huge segment of the watch industry that is thriving. People with money, Robert, and you know some of those people.
Yeah, it's interesting. It does seem like it's been longer than 3 years, because we've been through so many sort of reactions and responses to the watch. People have gotten more comfortable with the watch. It is a much more popular product among the high net worth than I expected. And I see a lot of billionaires that I know wearing the Apple Watch on one hand.
I love that, a lot of billionaires that I know, by the way.
Well, the ones I know. That will wear the watch on one hand and their mechanical watch on the other, or both on one hand, or the Apple Watch during the day and a nice watch at night. So I think it's had a much bigger impact than I and the Swiss watch industry expected.
So here's what we're going to do. Just want to let people know where we're going.
Yeah.
We're going to start off talking about this watch industry. We mentioned the Apple Watch. Danny Govberg, who is the owner of Govberg Jewelers out of Philadelphia, he's recently started this business, Watchbox, that trades in used watches, luxury, high-end stuff. You're going to hear from him. Then we're going to also talk super luxe, the stuff that the billionaires, a few of the billionaires you know, are using. You had Richard Mille on not long ago on CNBC. Going to get into some of the stuff that he's making. People are scrambling to spend 6 figures and sometimes 7, right, on these watches. And then James Park, the CEO of Fitbit, is going to join us just this week. He launched 2 new Fitbit watches. And Fitbit started off doing these kind of wearable monitor things, but the industry is moving more towards watches. He's trying to run to catch up. So what is a watch anymore? And why are people wearing them, Robert? Because, I mean, you can look anywhere and find the time. Your laptop, your phone, your whatever.
Well, you know, it's interesting if you go back to how people have told the time for ages. You know, you start with the sundial, and then it was pocket watches. And then people thought, well, the wristwatch is this sort of cheap technological wonder that doesn't deserve to be on the wrists of serious people. Everyone serious, wealthy, have a pocket watch. And what ended up happening is you had both. You had both thriving. And to this day, the most expensive timepiece ever sold is not a wristwatch; it's a pocket watch.
Really?
And
people still buying pocket watches?
As collectors, as collectibles, yeah. And so what's happened? Fast forward to the Apple Watch and smartwatches and Fitbits and everything else. There was sort of the notion, well, the younger millennials don't want anything on their wrist because they have their phones. And it turns out, you know, that this is more a segment about not so much timekeeping, but what to wear on your wrist and what purposes can that serve. And so we're seeing, just as we've seen in the car market, just as we've seen in a lot of the luxury spaces, this sort of divergence where you've got the sort of commodity technology, I just want a ride to get me somewhere in the car world. And then you've got at the very top, thriving, the sort of handcrafted, single, limited edition, high-powered specialty Ferraris, McLarens, Porsches, etc.
Or even Teslas, right?
Or even Teslas. That's right. That's right. And so you've got the sort of where the sort of lump in middle, which was just a really nice, maybe overpriced car that didn't do all that much, but everyone needed it. That's going away in both watches and cars. So with the watches, this weird thing where the very young like either a smartwatch or a very limited edition, highly specialized mechanical watch. And so you've got guys like Richard Mille, Audemars Piguet, to some degree Rolex, although less and less. What they want are brands that are very limited in terms of their production. and very finely crafted. What they don't want are sort of mass-produced luxury, where it's a sort of interchangeable thing and everyone has one.
Let's talk about what's happened to the watch business. Just yesterday, as a matter of fact, I met up with Danny Govberg. He's a guy out of Philadelphia. He's got a really interesting family story. The business that he runs is 101 years old. His grandfather was a watchmaker, learned to make watches when he was a kid, opened up a business at 17. It became more of a jeweler, got into diamonds. But then Danny brought the watch business back, trading in used watches, and then got pretty huge. It's at $200 million a year and growing right now. I talked to him about exactly what's happening in the watch business and why it's not crushing businesses like his. Take a listen. In the luxury space, there are some brands that are doing really well. You seem to be doing really well. What, are you at a $200 million annual run rate now in your business?
Yes, that's where we're running. We're growing at 35%, around 35, 40% a year for the last number of years in the category, because the category's taken off. But mostly when people talk about the smartwatch or the Apple Watch, I think it's a mistake, because the watch industry is sort of seeding that high tech is Apple and low tech is the traditional fine timepiece.
What should the industry be doing?
It's actually opposite. Real high tech is the watch industry, and low tech is Apple.
How so?
Because Apple's just software. It's a software upgrade. It's a chip. So it's a chip with some software. You throw it away. After 6 months, maybe even after a year, you have to get a new one. As technology goes up, the tech doesn't change that much. The software programming does. Where if you would look at some of the finer timepieces today, like a Breitling, for instance, they're using micro engineering. So the little screws are in people's mouths for, for implants. The materials, the metals are going to the moon. The oils that they're using are being used on satellites for forever lubrication. So the coils that they're using are sometimes thinner than a hair. You can't even see it. So if you would take the evolution of technology in watches, it's much, much greater high tech than the latest Apple upgrade, which actually is great for programmers, but I wouldn't call it the space materials that are going to go to Mars. Or, people don't realize that these wristwatches are micro engineering feats, and that the machinery that's making them are some of the most advanced technology in the world that goes into actually making and producing a wristwatch today.
So I believe you said that your pre-owned business is 3 times bigger than your new business, but they sort of benefit one another.
Yes.
At what point, I think you said it was around 2010, what made you realize that technology needed to be a bigger part of what you were doing with your business, and that you needed to really jump into it?
It's a good question. So what happened was, 2 things. One, I realized that the millennials were going to be much more social. Okay, so 2, I realized that they didn't mind screens. Okay. So when I grew up, you stood behind the counter. A millennial sits or stands behind a screen, and they love it. They talk to their friends, they can have a number of conversations going on, they can type as fast as I speak, they can text multiple people at the same time, almost, and hold 4 conversations while I'm speaking to you.
You sound like you're the parent of a millennial.
I am a number of millennials. And what I found was that I needed to take the business to what they enjoy.
We're actually at the Breitling store there in this lofted area. They got these cool little bar stool things, but they swivel. So that's why he's kind of faced over this way, right? Kind of turning like the hands on a watch.
You didn't.
I guess
we should have those here. That would be fun. We could
yeah,
kind of
it's a good thing we don't have that. I'd be facing that way at this point. What is it? Here's the app, Watchbox, and you go in here. They've got news about the watch industry. They've got the various watches, and I mean it's interesting. Some of them, I don't know if this one has, but some of them, you know, it says pre-owned. It's got all these images of it. He's added augmented reality, so you can see what it looks like on your wrist. It's an interesting take on this business that a lot of people thought, as we were talking about, millennials, they don't want to wear watches, they can just look at their phone. But there's a segment of the market that's booming. You recently had Richard Mille on CNBC. It's a name that a lot of people who just know what Casio and Seiko and Tag maybe watches don't know. But tell us what's special about this guy and what he's selling.
So I met Richard because I'm an obsessive Rafa Nadal fan in tennis. And Rafa Nadal, at a time when Rafa wasn't doing any endorsements other than Nike, endorsed the Richard Mille watch. And I learned that it was a $770,000 watch.
$770,000.
Yeah. And they sold out immediately. And the first time Rafa wore it, they sold out. And so I said, I want to find out about this company. And then I found out that among...
I got to pause here.
Yeah.
First of all, Fortt Knox Live, here with Robert Frank. We're talking about watches and technology, how technology is being built into watches, how it's being used to sell watches. And you're talking about Richard Mille. And this is a great story, but I got to ask, why are tennis players so often selling watches? You open up luxury magazines and you see...
Because the viewers of tennis are a luxury, affluent audience, right?
Okay.
And so I reached out to Richard Mille. I quickly found that Richard Mille was one of those brands that only the super wealthy know. And I gave it the moniker, when I worked at the Wall Street Journal, of the billionaire's secret handshake. Because when billionaires would reach out to shake each other's hand, they knew, oh, that's a Richard Mille. The rest of us looked at the watch and thought it was a Swatch. I mean, frankly, if you don't know Richard Mille, you would look at the watch and think it's plastic and that it's probably a nice Casio Super G-Shock or a Swatch or something. And so I started learning more about him. He's a car freak, so we had that in common. And then I went to visit him at his chateau, and then we went to his laboratory in the remote mountains of Switzerland. It's this beautiful giant glass cube in the mountains with cows grazing all around it. And in this little glass cube in the middle of the Swiss mountains, he is doing the most advanced engineering that I have ever seen. And you made a great point in this conversation earlier where the difference between technology and engineering. And when you think about technology with the iWatch, you are talking about software. You are talking about the sort of connectivity of that watch. Very different from engineering technology, which Richard Mille, he developed this way, for instance, to take these tubes of graphite and make them so small that he could actually, instead of sort of stacking them in the normal way, he would melt them together in a way that they could create such tiny tolerances that he could, in a very light, small watch, make a watch do things that no other watch could do.
Like what?
So, well, for instance, if you look at watches that can sort of, it's a mechanical watch, but it's a tourbillon, which is a very complicated way of saying it offsets the effects of gravity on a watch. Over time, gravity does affect a mechanical watch. It's like 1 second every 40 years.
Okay.
Something like that. Ridiculous.
Right.
And the way to go against that is to create this very sophisticated mechanism in the watch that takes up a lot of space normally. He made it tiny. And he does this with materials he's found from Formula One, from space and aeronautics, from professional sports. And so his watches do amazing things, but when you put them on, they are lighter than half a penny.
Wow.
So that's why the sports guys like Rafa and the tennis players, the golfers love them, race car drivers love them, because they're mechanical watches that are super light.
Hey, Evan, do we have any sound from Richard Mille?
No, we just had the watches that we were showing.
Well, you're showing the watches.
Yeah.
The prices of these, they range, right? Like you could get a bargain on a Richard Mille watch for $140,000, or you can pay that $770,000. What's the difference? I mean, it can't be materials, right? So, or can it?
Between
your low six-figure Richard Mille watch and your just about $1 million.
Well, typically it's so for instance, some of his watches have he'll use an all sapphire crystal, entire sapphire crystal face, which like just to make one Richard Mille watches, he probably throws away the equivalent of 10 watches in materials. Because when you're grinding sapphire to make an entire face or entire wraparound of sapphire, it's one piece. And if you make the littlest kind of error or it cracks, and a lot of the stuff he uses, the tolerances are like single microns, it cracks. And he uses these fine stones, he uses meteorites, he uses all these incredible materials. And the amount of stuff they throw out to make one watch makes it very expensive. Now when I was at his lab, that day I was there, he launched a watch that was $800,000. He launched it at 8 o'clock in the morning. I looked at his phone. By 8:30, he said, let me show you something. He showed me about 35 angry emails. And I said, what are those from? Those are from really wealthy people who wanted to buy the watch and who couldn't because he was only launching 70 of them. And they sold out immediately. The 70 sold out. But he had 35 people within a half hour angry that they couldn't pay $800,000 for that watch.
So is that smart business, or is that because he made $56 million like that in the half an hour?
Yeah.
But then, I mean, he left all that demand on the table. Once again, Fortt Knox Live, we're talking watches and luxury technology and watches, whether it's technology used to make watches or technology used to sell watches, and the technology that it takes, not just software, but also precision engineering to make some of the most expensive and valuable watches in the world. We're talking about Richard Mille and this sale of an $800,000 watch that he only made 70 of, and he had 35 more people saying, I'm pissed off, I can't get the watch. Should he have marked it up?
I asked him the same thing, and I said, Richard, you just make 20 more, and look how much money you'll have. I mean, and what 3 years ago when the Apple Watch came out, one of the things that it did is to further commodify the commodity part of the watch market and force the luxury players to become even more exclusive. If you're going to survive at the very high end, like Audemars Piguet, which is the watch I wear, or Richard Mille, you have to produce less, higher quality, rarer materials, and with more gee whiz stuff going on in the watch.
So tell me about this watch.
Oh, so this is the Audemars Piguet. So we were talking about engineering, and this is one of the cheaper Audemars Piguet. This watch brand, I have learned from wearing this that very few people over the age of 40 or 50 notice this watch.
Let's hold it up.
But 20-something people, wow, that's an AP. That's a new AP with the color dot. And when AP first told me, I had the CEO of AP on probably about a year ago, and he told me the average age of the AP buyer, these watches start, not this one, but most of their watches start at $25,000 and go up to over $200,000. He said, our buyer is in their 20s. And I just didn't believe him. I said, how do buyers in their 20s afford a $40,000 watch? It's just not happening. But I learned from wearing this, the people that notice it and know what it is are all 20-year-old guys, a lot of them in tech. And because in the tech world, among engineers especially, these watches are cool. And so one of the things that they do, for instance, see all these screws are all lined up to be exactly in concentric with this?
Yeah.
So those are all screwed on. Basically, they're put in and then screwed on from the back so that they stay. If you look at the way, just the band, look at the way it's brushed. So each of these pieces is brushed in a different way so that you get these contrasting brush, one going one way, the other going the other way. This is a chronometer. So you've got, this is, if I wanted to time lapse with a race car, that's what this is designed to do. You know, if you go down to just the feel of the dials, everything in this watch feels handmade. And when I talked to the CEO, I said, what's your plan to grow? And he said, my plan to grow is to shrink. Because I want to make fewer and fewer of them. And long term, that's what you have to do if you're a luxury brand.
So it's Silicon Valley has long culturally been against conspicuous consumption. Like the idea, you can't roll into the parking lot at eBay with, you know, a Lamborghini.
Right.
Don't do that.
Totally.
They drive a Prius instead.
Yeah.
Some of that's changing somewhat because, you know, now people are driving Teslas, but still, that's not, you know, a high six figures style car. But there are things that these guys, a lot of them guys, will spend ridiculous amounts of money on. They might come in jeans and a hoodie, but they're wearing an AP, right?
Yeah, absolutely. And it was an early thing we discovered with Silicon Valley is, you're right, everyone was wondering, well, what will they spend money? Because they're not wearing expensive suits. They're not into clothes. They're not into shoes. They're not into Ferraris. They love vacations. They love bikes. And they love watches, because with a watch, you can wear your T-shirt, your hoodie, your jeans, and still have something. Again, it's a brand that not many people, except for the ones that you want to know, will know. But in Silicon Valley, when you're in a venture capital meeting or something like that, the way you signal to your guy, I'm a big dog, is through the watch.
So, which brings us back to the Apple Watch, because here's the iPhone 10. And one of the ways that you signal that you're with it in tech is to have the latest iPhone, right? And,
Which I do.
And maybe, right? So you know, iPhone 10. But in watches, the Apple Watch does not mean that, is the sense that I'm getting. Now, you spend time with the billionaires and the ultra wealthy. What, if anything, does the Apple Watch mean? What does it signal? They tried to do this stuff with luxury bands and whatnot, even though, you know, pretty much the core watch part is all the same. I'm not sure it's worked. People are still, the rich, the people who are signaling that they're dialed in and doing a secret handshake, are still using mechanical watches, aren't they?
Well, it's both. The first thing is, when you're really wealthy, you want to send one of two signals with your wrist. You either want to say, I've got the most expensive, and a brand that you probably don't know unless you're one of my group. Or you want to say, I'm an everyman, and what matters to me is work and productivity and connectivity, and so therefore I'm going to wear the simplest Apple Watch or even a Casio. I've seen a lot of really wealthy guys wear Casio, just Casio digital watches, because they want to show that they're utilitarian in the things that matter, and they will spend money on family vacations. So you've got this kind of split culture within the wealthy. But again, a lot of them will during the day put on their Apple Watch or a Casio or something to show how they're really productivity minded and hardworking and practical. And then at night they'll wear the really expensive watch. But the other thing that was interesting about the Watchbook and the whole business that this guy was in, the whole business has been disintermediated by technology. And aside from the technology in the watch itself, it used to be if I wanted a 1965 Paul Newman Rolex, which is the watch that he wore that's now become the most expensive watch ever sold, you had to go to a guy who knew a guy who would give you a price, and it would be crazy, and you wouldn't know where it was coming from. And now,
let me see if I can find that on Watchbox. You know, the Paul Newman. Go ahead.
Paul Newman Rolex, Paul Newman chronograph. And now you can go on the web and find maybe not the year that Paul Newman's watch was, but you can find a lot of Paul Newmans. You can find the price. There is transparency in this market now. And this is really important because it's happening in all the markets I cover. It's art, it's wine, it's coins, it's diamonds. It's everything that used to be a very opaque market where the rich were preyed upon by advisors who would margin up everything and you never quite knew whether it was the real deal. Now it's all online. And people who own the watches can put them online. People who are trying to buy the watches can put them online. And now you can see, well, gee, what kind of watches was Rolex making in the 70s? They look pretty cool. I want one. Well, here are 5 for sale. You couldn't do that even 5 years ago.
Wow. And there's this other rung of the watch game that is being powered by technology. Apple is the leader in that space, but they're not the only ones. I mean, Samsung is out there with the Samsung watch, and now Fitbit is playing a bigger and bigger role in this business as well. Fitbit was just on Squawk Alley on CNBC yesterday. James Park was in New York talking about the Fitbit Versa and the Fitbit Ace. Two new watches. One's for kids. The Ace is $100 and will do kind of health tracking, but it's not connected, so people can't follow your kids around, which I guess is good. The Versa, $200, a little bit more stylish than some of the other watches Fitbit has come out with. They're kind of criticized for looking a little bit too utilitarian. Do we have James yet?
He's turning around.
He is turning around. He's going to be so. James is going to join us from One Market in San Francisco to talk about that piece of the business, and it's tough versus Apple.
Well, I was going to ask you. I mean, you know, Fitbit was a craze, and then it felt like it faded. Long term, what do you think?
Long term, I think that the fitness watch and the tech watch business is not living up to its promise by and large. Like I tried the Apple Watch.
Promise?
The promise was this is going to be this kind of tech narcissistic view of yourself that you couldn't get otherwise. You're going to show you exactly how many times your heart is beating, exactly how many steps you're taking, and allow you to optimize your life. I found, I don't know if it's just me, but it wasn't measuring my heart rate correctly.
Oh.
And for me, having a watch, a tech watch that's giving me a bad measurement is worse than not having it at all. Right? And I think
is that why a lot of people gave up on the Fitbit world? Because, I mean, there was a Christmas, I don't know, it was 2 or 3 years ago, where everybody was giving each other Fitbits, and then nobody wore them.
Yeah. My theory on that, because we gave my in-laws Fitbits, and I don't see those Fitbits anymore that we gave my in-laws.
I thought you were going to say, I don't see my in-laws anymore after that.
No, I still see my in-laws.
Okay.
They're great. Love my in-laws. But, you know, they're not necessarily using their Fitbits.
Yeah.
I think for a lot of people, they're vegetables, right? It's a have to do as opposed to a need to do. And that is what James, with the design of these new Fitbits, particularly the Versa, is trying to turn around. James, welcome to Fortt Knox Live.
Hey, everyone. Thanks for having me.
So tell me about the reception that you've gotten to the Versa thus far. I think you've opened up pre-orders already, right?
We've opened up pre-orders. Pretty happy with the way that the launch happened earlier this week. Versa is, as we said before, our first mainstream smartwatch into an incredibly fast-growing category. I know you guys were talking earlier about how this whole category was doing, and I'll have to say, it's actually a pretty big opportunity. If you look at IDC stats, this whole wearables category is still expected to grow and double by the year 2021, and a lot of that growth is being fueled by smartwatches. You already see Apple being pretty successful with it, and with our entry of Versa, we do expect to grab greater share. And I'll have to provide some data around how people use it as well. We actually still have 25 million active users on Fitbit since the inception of the company. That actually grew year over year, even though unit shipments declined. And that's actually going to show that people are using these devices longer and longer.
So tell me, that's great data. You guys are also, I believe, the number1 fitness device, maybe watch, connecting to Android phones. Apple is for sure the leader connected to iPhones. But what is it that you're seeing that perhaps is a little bit different as far as how Android users are engaging with the watch, and why do you think you guys are particularly in the lead there?
So I think one of the benefits of using a Fitbit device in our ecosystem is the fact that we're cross-platform. We work with both Android, with iOS. We work great with Windows desktops, if that's the way you want to sync. And I think that's demonstrated by our success in Europe, where actually Android has a predominant market share over Apple. And over 40% of our revenue comes internationally. And we see that as a huge area of growth, whether it's in Europe or in Asia. And our devices, because of its long battery life, cross-platform compatibility, focus on health and fitness, our data, our community, all play to that strength.
Yeah, I have a question. I mean, in terms of when you mentioned 25 million active users, which is an amazing number, what is the definition of active user? Could that include somebody that started using it maybe a year ago after John gave it to them as a Christmas present? Now they don't use it anymore. Or what is the definition of that? And do you have any data on the continued use, how many average hours, et cetera, and how they're using it?
Yeah, so the data that we publish is active users, and the definition of that is whether you've walked a certain number of steps and synced your device in the past 90 days. I think the most important thing to note is that definition has remained consistent since our IPO. So if you look at that number on a year-over-year comparison, it's a good way to see if we're actually improving our retention numbers, which was a question when we went public, actually. And I think the good thing is that our investment in software, along with hardware, is actually improving that retention number over time, year over year.
James, what do you think your buyer is going to be willing to pay a premium for? Because, I mean, yeah, we've talked about you guys have challenges at the lower end, Xiaomi and others trying to take away the lowest end business. And you've got a bit of a challenge at the high end with your iPhone, iOS user who's maybe opting for the Apple Watch. How do you think you can perhaps over time break through into more and more of that luxury segment that in mechanical watches that we've been talking about seems to be doing pretty well?
Yeah, on the luxury segment side, that's really not the strength of Fitbit. What we want to do is provide a lot of value to our users focused around health and fitness. And while many outside observers have, talked about the threat from the lower end devices, whether it's from a Xiaomi, actually, if you look at our revenue numbers and our ASPs have remained remarkably stable.
And that's average selling
time,
prices,
which shows that there's average selling price,
yeah.
exactly, which shows that there's not a lot of pricing pressure from the bottom. So what we're trying to do is through software actually deliver a lot more value to our users, which allows us to maintain that ASP. And it's part of our transformation as well, investing in software to move our revenue streams from being primarily device-centric today to having more recurring revenues on the software side.
It's a new segment for you, so maybe give us some color on how the Ace is doing pre-order-wise right out of the gate.
Yeah, I think Ace has gotten a great reception. It's a product that I'm super excited about because childhood obesity is a huge problem, not just in the U.S., but around the world. And there's a lot of stories today about how tech companies are using addictive techniques and software to actually get kids more addicted to their screens. And the reason that I think products like Fitbit Ace are incredibly important is that we are using technology to get kids away from the screen, more active, more healthy, and involving the whole family in that process.
See if we can get them off the couch, hopefully.
Exactly.
Hopefully the Ace doesn't end up in the toy bin. We talk about things ending up in the drawer.
Yeah.
It's a good-looking product. James, thanks for joining us twice on CNBC and on Fortt Knox Live. Really appreciate it. And for those of you who have been following along, we've been talking about, my goodness, the luxury watch segment from the sub-six-figure area, from 4 and 5 figures, where a lot of Rolexes play, up into 6 figures, covering the Apple Watch, Richard Mille, all of that. Danny Govberg is going to be the guest on this week's Fortt Knox podcast. He owns Govberg Jewelers out of Philadelphia and Watchbox, which is global, dealing in used watches. It's turning into a pretty big business. He's got ambitious goals to grow it pretty quickly. Find out what's really happening in this segment and why, hey, millennials, they're buying watches.
$200 million.
$200 million annual run rate.
That's crazy.
He just opened up a branch in Hong Kong with a partner who he knows out there.
So one quick thing about Hong Kong is they are finally coming back. 2 years ago, all the watchmakers were buying their own watches back and destroying them in Asia because there was so much oversupply. It's all coming back, and this is good news for everybody.
Yeah. Well, it's been Fortt Knox Live. I've learned a lot. Thank you, Robert Frank.
Thank you.
And thank you to Robert Frank's billionaire friends educating him on the watches that they're buying with their secret handshakes. It is time to